interesting that the IMF comes with the upgrade at this point. So I do agree on China, where the reopening will have a big impact. They say the second half of 2023, maybe even a bit earlier, that we see that boost to at least China growth, maybe more domestically oriented, so not such a big impact on the global economy. But actually, when you look at the most recent numbers from the US and also from Europe, you see that consumer spending has been quite weak. We've seen two months of declines in real consumer spending, so adjusted for inflation. In the US, we've seen retail sales in Germany this morning very weak. We had some growth in France, but consumption was actually falling. So I think that the picture going into 2023 was not that strong, actually. We do have tight labor markets, which offer compensation and a better energy picture in Europe. So that's also what the IMF says. But I think the possibility of a recession in Europe and also in the US is still firmly on the agenda.
It felt as though we saw that change in sentiment really around Davos, where people became slightly more optimistic, and perhaps some of this was around that reopening of China theme. But to me, there are still a lot of negatives here, and if we can perhaps run through some of them. I mean, the geopolitics, we're still watching this war in Ukraine unfold, and there's still concerns about where we go next on that front. In terms of tackling inflation, we are still not done yet in terms of what central banks need to do, and the moves we're seeing out of China could in fact fuel some of the inflationary challenges from here. Just run us through some of the grey swans still that lurk really around 2023.
Well, I think when you talk about geopolitics, yes, the war is going on and all the uncertainties, but I think the big improvement for Europe is obviously the gas, the natural gas situation. So the storages are fuller than they've ever been at this time of the year. Prices have dropped massively, so that is something that has really improved for Europe. And also the replacement of the Russian supply has gone better than expected, I think. But yes, inflation is high. We have all the central banks coming this week: the Fed, the ECB, the Bank of England, all expected to hike. And you see that the impact of the hikes so far are starting to be felt in the economies. We know the U.S. housing market is weak. You see durable goods consumption slowing. So really the interest rate sensitive part of the economies, that they are being affected by those central bank hikes. And they're not done yet. We're getting closer to the peak, maybe a couple of months. But I think, then you get a pause and no rate cuts yet, because inflation is still too high. So I think that is still a big risk for markets and to some extent also for the economy.